Alright boys, you have probably been waiting for this for a long time right now, but now we're going to show you a really cool entry model which you can utilize straight away. So let's head into the charts and I'll show you how it actually works. We can do some drawings first, and I will show you a little bit on how it works with some arrows and stuff. So market is going, you see the market is going, and then market is usually doing something like this, right? Doing something like this and pushing again, and then it leaves a liquidity area right there. Price likes to come back into that liquidity area and just take it out and then push price higher. That's basically the gist of the model right there. This zone right here will look for common traders that this is a strong support and a safe place to put their stop loss, right? This is a safe place for them to put their stop loss. And what you can actually do when you're seeing an area like this, you can anticipate that price will come back and sweep this area before it's actually going to push to the upside again. And usually what price comes back into when it actually does this, it's mitigating the first demand zone under these lows in here. So the only thing you actually need to do is looking for that first demand zone to push price higher. And usually when you get this triggered, you're going to get some crazy risk to reward trades right here, right? You don't need many of these to actually pass a prop firm account or make some really good profits by doing this, because alongside you watching these levels right here, institutions and bigger players is also going to watch these levels right here as well and take out the stop losses right here to add more liquidity to their positions. That's why they are building a liquidity pool like this. So let's head straight into the charts and I'll show you exactly what I mean. So a couple of days ago I posted a signal on on euro dollar, and this was basically the liquidity level I was watching for right here. And I used the point of control to find out where most of the trades occurred in this sequence right here, from this low to this high, and I found out that these are late buyers of this one and is creating a safe haven for people to put their stop loss under. And what price is usually doing, it's taking out the liquidity right here, and this is going to be the protected low right here, and then there you can push this price to the upside, and you can see the results of what I mean right here. And you can see also that price came back into the first unmitigated demand zone under these lows in here, right? So these were the lows we were targeting right here, because this is looking like a safe haven to put your stop loss, but it's not, right? So this is the first demand zone under these lows in here, and then price wicks in and then pushes price to the upside. I actually got the signal right here posting this, and this was the trade, right? So this type of event occurs all the time. So right now we can look at let's look at what the euro is doing right now, right? So if you look at the 15-minute chart, we can see that price is actually creating, I'm actually in replay mode, so don't do the replay mode, but we can actually see right now that price is actually creating another liquidity pool right here. It's safe haven for price to put their, or retailers to put their stop loss right under here, so it's probably going to be liquidated as well in here. And then you're looking for the first unmitigated, let me just delete this, first unmitigated zone under these lows in here, and the first unmitigated zones under these lows are basically this I think it's 15-minute candle in here. Let me see, where are we? We are right here, 15-minute candle in here. It needs to be unmitigated. It's really important that it's unmitigated as well. So this one is not unmitigated, so I want to get the first unmitigated zone under these lows in here. So this is not unmitigated because price broke out, came back in. So I would look for probably in here, right here. Or let's look for on the 3-minute, maybe we have something better on the 3-minute. Yeah, we do have something better on the 3-minute right here. This one right here. This 3-minute candle is actually unmitigated. You can see that price broke clean above here and didn't come back and touch into this zone right here. So that's basically the demand zone I'm looking for. Or else we have this, so you could potentially use all of this right here in one right here and look for price to come back in here and then push to the upside again under these liquidity points in here, wicking, coming back in, and then shooting to the upside again. So this, when this occurs right here, when price is coming down and shooting back up, this is going to be the protected low right here, and price might do something like this. Like here, it's going to take out liquidity, then it's going to go up, and then it's going to go a little bit down again, and then it's going to create another liquidity pool like this right here, you see, and then shooting up and then coming straight back down, scaring the shit out of you. But it's actually just taking out this liquidity pool right there. This is still going to be your protected stop right there, and then pushing price up like this, right? So I'll show you that example as well, because it happened on this trade. So let's look a little bit deeper in here. So as soon as price came into this demand zone in here, and then it started to push the upside, it actually created a liquidity pool right here. You see that? And then price came down, took out this liquidity as well before you got the push. And you think this is a safe place? No, it's not, right? Because the only protected low you have here is this one right here. So that's why trailing your stop is a stupid thing to do. So if we look at this low in here, I believe it actually came down and took out this low as well. Maybe it didn't. Okay, so in this sequence, it didn't actually take out this low, but that's okay. Sometimes it actually takes out the low 2 times in here. Or maybe it actually did. Just give me a second here. Let me just go back to this segment. Well, we're all the way over here. Yeah, there we go. So basically, you can see this is the liquidity point I was talking about. First, took out this one, and then this one after that, basically, right? Took out this low as well. So the only protected low you have was basically this. So don't move your stop loss until you're sure that the market has actually went in your direction, and then you can start to trail, basically. So for this to really go to the upside, I would basically, if you want to start to trail, I would look for this high or something to get broken to the upside and starting to make higher highs and stuff like that. And when price is finally going, you can start to trail your stop if you want to. That's all up to you. But you will see that price will leave some liquidity points here as well. You can see that these are basically where price would look for, or people would put their stop loss under it. If they see the break right here, put their stop under here. But you can see that price comes back into the previous demand zone in here and then mitigates that and then moves higher, right? So you will get those opportunities to take those buy trades all the time, or sell trades if you're bearish, right? It all depends in here. So we have a new point right here. If you use the point of control, is this Wanda? Yeah, it's a Wanda right here. So for example in here, if you take it all the way in here, yeah, let's do it like this. You can see that most of the trading occurred around this zone. These are the late buyers, and their stop loss would probably be below these lows in here, right? So you're expecting price to come back in, mitigate all of these lows, and then come back into unmitigated demand zone in here. So let's look, maybe it was on the 30-second chart, but now I actually lost track on where we were here. So just, I think we were we here? Or, we're on the Oh yeah, we were actually here. I think we were here. Oh, maybe not. Maybe we was a little bit later here. Okay, yeah, it doesn't really matter. But I think we were here, actually. Yeah, within here, ticking out. Yeah, you can see this. Yeah, we were actually here. Just let me do the replay, because that's better. Okay, so we were on the 1 minute, I believe. 1 minute, yeah, we were looking at this, right? And we were just looking for the first unmitigated zone under these lows right here. And then you can see the 5 minute in here is actually unmitigated. So this is, oh, let me just do this. Yeah, this is the unmitigated zone right here, and you can see the price actually came back and mitigated that demand zone in here before pushing higher. So you can use this tactic all the time if you want to. But this is a really nice entry model. Simple, clean, and just follow the order flow. Order flow is always the king, because that's basically the edge of the market. So that's basically the gist of this model right here. But we can, let's go into another chart in here. Maybe we can find some other clues in here. And NCD JPY is it's a random chart, but we can have a look and see if we can find some valuable liquidity zones in here where people would most likely put their stop loss under. You can see that price made a new higher high. It's actually coming back in right now, so I think it's actually going to sweep some lows here before we're actually pushing higher again. So we got this low, this high, this low, this high right here, coming back in with some tremendous speed in here. So let's take from this to this right here. I just verify that most of the trading occurred in this zone right here. So most of these buyers would likely to put their stop loss under these lows in here, right? Under these lows, this would probably be the area of interest right here, up there. So we could stretch this out, looking for price under here to come and mitigate the first unmitigated zone under these lows in here, and it should be pretty close to these lows as well. So let's do oh, I'm in let's see here. Yeah, I was in replay mode. I didn't actually recognize that. Where was I though? Where was I? Under these lows, so this was the low I was talking about. So under these lows, it's looking for the first unmitigated zone under these lows, which would be approximately inside of this range right there, right? Yeah, that's basically what we were looking for. So we have this one under here. This is one of them, but I think we're going to get one closer here. So let's have a look. 5 minute, nothing. 3 minute. Yeah, you have this zone here, which is unmitigated on the 3 minute, and might be the likely area where prices come back in, mitigate the demand zone, and then push price higher in here. So you have right now, you basically have a signal for price to come back in and push price higher, right? Taking out liquidity, coming back in, pushing price up to create a new high. So something like this, coming down in here, boop, to push the price higher. So you can get the maximum risk to reward trade. Let's look closely in here as well. We might find something else in here. So this is the liquidity. It's actually creating a little bit of a liquidity area right here now as well. So if you take the point of control from this point, this high to this low right here, you can see that these highs are where the liquidity is basically resting above right now. Let's take the whole thing in here, take it from here. Maybe this has moved. No, this is the same thing. So you can see that these highs is also right here, looking for price to mitigate something above this high right here, and the only thing I actually see above this high is this demand zone above here. and then liquidity coming back in, tapping into this one. If it fails to go down here straight away, this might be an entry point for price to push price up, push price down, and go back up, right? So now you have like a couple of places where you can look for entries in the market. But that's basically the entry model. It's pretty simple, only attacking liquidity, and the places we're looking for is basically where the big boys would likely put their orders as well. So I hope you like this video. If you need some more insight about this strategy, join our Discord. The link is in the description below, and remember to subscribe, like, and comment. See you guys later.